JB here. Hope everyone's doing outstanding. Friday, February 27th, uh, about 3:29. Just really quick rant, talk about the market, some names I'm looking at go from the S&P. Pretty much down 0.5% off the lows, not at well, right into the highs of the session. Uh, Interesting end to the week. Came into today pretty much flat. Then we had PPI data, which probably didn't mean too much. I came in a little hotter than expected, and then you have this whole backdrop, right? You have CRWV earnings I was talking about yesterday afternoon. You have XYZ. You have blocks, 40% workforce cut, which again I said it this morning. Maybe I have it totally. Maybe I'm totally off base. I don't see how you can cut 4,000 employees on a company. And like how that comes to that, right? That to me, that's just horrible leadership. That whether that whatever call you can make any excuse, right? To me, people can blame it, put it as a read through for the rest of the names in similar sector and say it's AI, right? Here's the sign that AI is killing jobs. I think it's just horrible. It's a company that's allowed the staffing to get to the point where you're able to cut that many jobs and still exist. Mind-boggling to me. But then you have that, and then OpenAI, right? So you have this deal, Amazon, uh, what was it, 100, how many billion? 110 billion dollar deal, or no, 50 billion deal, only like 10 billions assured, the rest is conditional, puts their valuation somewhere around 840 billion, something like that. So I don't know if that has kind of revalued some of the other names. Possible. Oh, Dell just hit highs today. Oh man. But yeah, interesting. So today's like another one of those. I hate to even call it like a red day. It's like another revalue the market day. It's like I don't even want to call it a rotation because there's names in the AI semi space that are doing well, and then there's other names taking on the chin. So take it at what you will. Unfortunately, some of the names that get taken up in the windstorm, like the Lemonades and the Reddits and the Roblox, are all taken on the chin today. Riddle me that, right? Lemonade, if financials are taking on the chin today. It's like the third week in a row on the Thursdays and Fridays. J.P. Morgan, Wells Fargo, Bank of America, Citi, BlackRock, they're all hurting today. It's like someone says, okay, sell financials. JP Morgan's off the lows of the day, and I was almost looking for some hedge puts into next week. But for me, I'll just continue to sit on my hands, try to be selective as opposed to trying to predict where the next market turmoil might happen. Over the weekend, you have to figure there's going to be some event in Iran, whether it's a deal happening or some kind of event. It just seems like this always happens on the weekend. It's like scripted. And you hate to think that military action that involves people's lives is a scripted event. But that's kind of where things are. It is. I'm here to trade. I'm not here to make opinions on things. It's just how things have been. So hopefully we don't have to be looking at the futures over the weekend and wondering, and you don't have futures. So you have to look at the crypto market and the betting market to to figure out where things might go. Hopefully we're not in that situation. But anyway, a lot of the market catalysts out of the way. We have earnings pretty much out of the way. There's still a lot of names next week. But outside that, we're going to have a fresh month. And February's, historically speaking, not one of the better months, especially the back half of February. So maybe a new month, kind of peel off all the dead skin and find some opportunities. All right, that's overall market. So quick on individual names. Oh, and CoreWeave. I was talking about CoreWeave earlier. Maybe that's like the proxy for the great circle jerk. And I have to kind of look more into the deals, right? I mean, I've been talking about the great circle jerk since August, September. If we do have some kind of crazy move in AI, so a lot of it's already happened, right? And even if you tried to trade it, you had to be in, some of the names moved early, right? Some of the other names are moved later. So the timing has been the hard aspect of it. But if there's more of this circle jerk and more craziness that's going to happen, this CoreWeave might be kind of like the proxy for us. I got to look at all these deals and stuff. All right, that's overall, Mark. Just quick on individual names. Today I was hoping to lock the rest of my Roblox calls in and add some for next week. And Roblox looked like it was going to break out, and 74.52 is the big spot. It couldn't get going, got up to 71, and then boom, they just sold it off all the way down to 68. And I don't have my chart here. So I'm just going to sit on my hands there. At some point that one goes. I'm not going to force the trade there. And then so it brings me to Netflix. And there's been trades over the last couple of weeks. So I'm like kick myself trades. I forget which one was last week. But this week I was looking, which one was I looking at last week? I forget. But anyway, Netflix yesterday had relative strength. And you look in, I think it was $90 or no, 80 some dollars. And I mentioned a couple of weeks ago, whatever, maybe at the start of the year, when this deal with Warner Brothers. And I'm not a big fan of these companies that go out and do acquisition, right? You've been a great company. You've created market value. You've created content yourself. You've done all these great things. Why go out and acquire other assets, right? I just didn't get that. And, Netflix was always one of those that they rented out or leased out or had deals, licensing deals with all the content. So for them to go on Warner Brothers, I don't know. I'm not in their shoes. So not only that, when you do these acquisitions, it creates just more noise, more things to look forward for, more costs to look into, more it just lots of clutter. And that's why when you see the reverse, when you see companies like if Netflix was spinning off Warner Brothers, it'd be up 15% today, right? That's just how funny how it works. So I'm just kicking myself for missing it this week. So not being said, I mean, I hate to go and chase another name in some space, but Roku's always one of my favorite names. But Roku finally starting to melt higher, and with the market being a little, I guess tumultuous. Can't get these words, tongue twister. The last couple of days, tough for me to get my hands around getting the Roku calls, but then finally today, I'm like, okay, it looks like it's ready to go. You have the backdrop of this Netflix situation. Netflix now is $50 billion that wasn't going to be deployed on an acquisition. It's not free cash. It wasn't like they were going to raise all cash to do it. A lot of it's cash they were going to use. So I'm not saying they're going to go out and acquire something, but here's a name. Roku just had its first full profit quarter, right? We'll take out all the BS numbers, all the fancy gap accounting BS stuff that people do to fluff their numbers. All that stuff aside, Roku still made up $85 million last quarter. It's now it's in a turn where it's going to continue to make profits quarter after quarter, pending any craziness. So still a great growth story. I always talk about it's the only third-party content provider. Doesn't matter which platform, the Peacocks, the HBO Maxes, all that. It does them all, right? And you take a look at like YouTube TV. They have Amazon. They all have conflicts of interest where they can't get all the content to be third-party because of button heads. So anyway, I always look at Roku as one of those names that's misunderstood. Its last earnings, I mean, monster earnings. The stock was down in the 80s, all the way up to $90. I think it got close to the mid 90s, and then just fizzled. And now it's back on track. I think it heads over $100 next week. I mean, 98.44 just a little while ago. So anyway, I was looking for decent risk reward strikes. Got the 106s. Boom, it rallied up. I was able to close some out to cover costs for 100%. I'll hold the rest. I was actually looking for the 110s for next week. You have to think. And back in December of 2024 and into 2025, you had Needham and some other folks, even I think Citron Research talked about Roku getting acquired by Netflix. So I'm not saying that's out there, but you have to think with Netflix rumbling over the weekend, rumbling into the weekend, people are going to be looking at that space, and any noise in the space that rises, that with stocks rising, typically people start looking at eyes at M&A and other things. So I love the Roku story ever. All right, so I'll continue to hold those into the weekend. So thankfully I was able to get that trade. But then on the flip side, just disappointed on the follow through on Lemonade, right? I looked like it was ready to break out into the 60s to end the week. And then again, it's like financial sell off, Lemonade sells off. Insurance names sell off, Lemonade sells off. Software stocks sell off, Lemonade sells off. But if financials go up, Lemonade doesn't go up. It's just frustrating, right? So again, not trying to, hopefully Netflix goes for you. 96.72 just hit new highs. Lemonade's 51.32. Gosh. All right, so that's that. Serve Robotics. I mean, I'll just wait till the weekend. It won't take much for that to get going. Disappointing too. I mean, all the way down to 960 today. That's still down. It's still down. It's at 980, but it's down 6%. So what do you do there? Travel Zoo off the lows all the way at 621. It's like watch. It always is. It's not like today's the only day that trades with low volumes, but I'm not going to add any more strikes there. It's still trading. It's still 15 by 20. It's down to 15 by 20. Yesterday was 20 by 30. I'll continue to hold those calls. Other names I'm looking at, obviously Pool, right? So if you looked at the Pool a couple months ago and it was trading at 225 with 3 weeks to expiration on the monthly strikes, for example, the March strikes right now, the contracts would be a heck of a lot more expensive. So when I look at Pool right now, it's trading at 225. The 250 strikes are 60 cents by $1.40. They're actually up 75% today. I was looking at them yesterday. They were like 50 by 60. So another name I probably should have got strikes on. But with that being said, there might be some opportunity. Rough earnings this past quarter, but not that bad. And you take a look at what's going on with rates, right? The 10-year just went under 4%. And then you have this whole backdrop of mortgage rates being at 3.5-year lows. All those things together, you have to think people are going to be doing things, whether it be refinancing to buy Pool, do some upgrades in their home, which right in the wheelhouse of Pool. They also recent insider buy. You have the backdrop of Buffett. So, but what I'm saying is maybe next week I'll get some Pool strikes. But always the name I'm looking at. I was looking to get some lottos today, like kicking myself, but not really. ServiceNow, I almost got the 109 strikes. They were like 5 by 15. I tried to get some at 10 cents, couldn't get a fill. pulled the order. It started to break out up near 109, and I'm looking. It was only like 20 by 40. So even if I did, would have been tough to get out. I probably would have held them anyway. And boom, now it's down to 107.70 again. So I was looking at that. I was looking at CoreWeave puts, right? And last week, CoreWeave had some news. I don't know if there was like financing deal that got pulled back on the data center. The stock was in the 90s all the way down to low 80s, and it started to bounce. And I was looking at the 90 strikes. Those would have paid, but couldn't pull the trigger on that one. Maybe next week I'll get a little more aggressive on some lottos. Last but not least, Reddit too, right? Now I want to sit here and look for Reddit strikes into next week, but like there's no rush unless they have news Monday. We don't know what's going to happen over the weekend. Reddit's sitting here 143. Does it go back into the low 130s? It's possible. You start looking at next week's strikes. They're down 60%, right? Stock's down 4%. The 150s are down 60%. Down, well, 150s are 50%. So, I mean, the 160s for next week are 72 by 89. Relative to all the other times you look at Reddit strikes with a week out to expiration, that's cheap, right? So hopefully I'm not kicking myself Monday with those famous last words, but maybe Monday will be the day I finally get back in some of those strikes. But to me, I hope the market starts getting back into things matter, right? The earnings matter. Last but not least is GLW, right? So Corning coming into yesterday, I think the implied move was 14%. Now you look at the March 20 strikes, the implied move is $20. Oh, still might be the same. Where's my trusty? Do I have my trusty calculator here? What's $20 on 150? So it's a $20.63 implied move on March strikes. It's a 150.29. So $13, 13.7% implied move on GLW still. So impressive stuff. It's actually flat. Well, actually, just a little bit of green there. The 150s are 10.985 by 10.30. So that's the thing. If I want to get back in the monthly strikes, so next Friday is the first Friday of March. So there's only 3 more Fridays. Next week is a Friday and 2 more after that, and there's still premium still elevated. So, and even that, you look at the out of money strikes on the 205s are actually green. Yeah. Anyway, food for thought for over the weekend. I'm sure there'll be news at some point. Anyway, thankfully, GLW saved the week, and there'll always be others. Let's have a great weekend, folks. I'll be back. Rock and roll.